Dalal Street witnessed another bloodshed on Thursday as weak earnings by retailers listed on Wall Street rang alarm bells regarding subdued consumer demand. The BSE Sensex crashed 1,416 points to slip below the 53,000 mark, while the Nifty 50 gave up over 300 points to slip below the 15,900 mark. So far in calendar year 2022, frontline indices S&P BSE Sensex and Nifty 50 have bled over 10% each, whereas broader markets have tumbled up to 21%. The selling comes on the back of monetary tightening by global central banks that are walking a tightrope to tame inflation while allowing growth to prosper. Soaring oil prices and earning downgrades are expected to keep market confidence muted in the near term. That said, what has worsened the correction is the relentless selling by foreign portfolio investors for 8 consecutive months. Since October last year, FPIs have sold equities worth nearly 2 trillion rupees, with 4 of the 8 months seeing selling of over 30,000 crore rupees each. And despite retail investors and domestic institutional investors giving muscle to the market, FPIs are having an upper hand. So what's worrying the FPIs and when will this selling abate?
I think there are a couple of things which the FIs are really worried about. One is rising inflation across the world. And the second thing is basically shrinking of the balance sheet of all central banks across the world, whether it is Fed, or it is the European bank or the Japanese central bank. So everywhere basically this liquidity which has been there in the market, I think has created quite a bit of inflation, and that's what they believe it has to be withdrawn. And when you withdraw this liquidity, basically it is going to affect the demand. And that is what I think the US is worried about. Again, on the US side, we really look at it, the 10-year yields have gone up to now 3%, and the dividend yield on S&P 500 is only 1.5%. So it makes a lot of sense actually for the money to move back to the US and go and get invested into the 10-year bonds in the US. You're getting something like a 3% yield, which is very interesting. I think it will take at least a quarter for them to become convinced about this. We have already started seeing some slowdown in daily selling, which used to be around 4,000-5,000 crores, has now come down to 2,500 crores. So that is one part of it. But I think they will wait to see that the inflation is getting controlled or the peak of inflation is happening in the US. So I think they will wait for a couple of months of print before coming to that conclusion.
While Maheshwari believes retail investors have behaved maturely during this breakdown, a break below 15,000 on the Nifty can trigger fresh bout of panic selling. After yesterday's closing, tech charts suggest that the Nifty 50 formed bearish pattern on the daily charts on Thursday, signaling a negative trend. The index now needs to hold 15,671 for a reversal, while it may face stiff resistance at 16,000. On Friday, investors will watch out India's forex reserves data, the UK's retail sales data for April, March quarter results, and other global cues for today's trading session.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.